And now let's welcome on board Suneeta Reddy, the MD at Apollo Hospitals, and chat about how their earnings have been. Ms. Reddy, great to have you on the show. Your occupancies this quarter gone by have improved by 68%. As we head into the second half of the fiscal, do you see it improving to, say, 70 plus levels?
Well, I think, it's important to see the correlation between our loss and occupancy. We are at 68% occupancy, but our loss has reduced to 3.26, which is a 5% drop. So if we didn't have the 5% drop, we'd be at 70% occupancy. So with this current loss trending as it is now, we should, be able to maintain the 67%. Because of reduced number of days per week, unlike other hospitals where the loss is higher.
Right, Ms. Reddy, now on the healthcare business, what is the target GMV that you have in mind for FY24, and what is the internal estimate when it comes to breaking even?
So currently we are at GMV of 725 crores. And this has been growing very strongly by 147%. So our target is 3,000 crores of GMV, and we will definitely achieve this. Break-even for Apollo Healthcare in totality will happen in the fourth quarter of this year, and break-even will happen 4 quarters later for the digital. So it will become profitable in 2026.
Right. Since we're talking about, HealthCo, third quarter was the intended timeline for the fundraise. Given how things are today, do you see it happening soon? And at what valuation then?
I think we've always maintained that we would only dilute at the right valuation. And, as we've looked at the progress made by 24/7 this year, it has been very good. So the entire loss was only 39 crores, out of which 34 crores was attributable to ESOPs. So technically only a 4 crore EBITDA loss. And with this trend, we believe that the valuations that we get should reflect the quality of growth in the company. Having said that, there is no need for immediate cash infusion. It is being supported by 130 crores of EBITDA coming from the back-end pharmacy. So clearly, there is cash for growth existing within the company. And at the right valuation, we will look at a 10% dilution.
All right. And what is, what I'm inferring from what you're saying is that as of now, you're not in a hurry. So most likely not this year, right?
At this current rate, there's no pressure to really sell. We are introducing some products next year. So at that time, we have people who are interested to take a stake, and we want to be able to launch those products before we really do, take in capital.
Right. The reason we asked you about this fundraise was to get a sense of how you're going to be funding this 3,400 crore rupee capex that you've lined up. Should we expect then more debt on the books?
So as you look at it, we're adding 1,100 beds this year, and we're deploying about 1,300 crores of cash. So clearly we have 600 crores of bank. We have balanced with mutual funds, etc., and 600 crores of cash flow. So we're good for this year. It's a very calibrated expansion plan. We have headroom for debt because our debt to equity is now below 0.4. So there is room for us to take debt, but it is not required this year.
Be organic or inorganic, because hospitals have been one of the hottest M&A sectors this year. There were talks as well of HCG, Aster, etc. being on the block as well.
So we continue to look at acquisitions, and we've done some bolt-on acquisitions. I mean, last quarter we did Kolkata, we did Future Hospital. We're adding 330 beds there. And this quarter we finalized a hospital in Pune, which comes at a cost of 670 beds. First, in 2025, 24-25, we will have 250 operating beds in Pune, and it's scalable to 450 beds.
Right. And what about the capex? What would it do to the ROS? And, it's currently at 28% for hospitals, as we understand.
So currently it's at 28% for hospitals. And this is really what we're tracking because a big capex will happen in the hospital space. We believe that 20% is a hurdle rate. So it will not drop beyond that.
What about diagnostics growth? Because the target there was 500 crores this year. Are you sticking with that? And what about margins then?
Yes, we're on track for that. We've done about 150 crores of revenue in the diagnostics, and margins have also improved to 12%. So there is an investment being made into the diagnostics of 150 crores over the next few months, and with that, we should be able to grow it significantly.
Okay, so how much has been the growth in ARPOB this quarter, and what is the outlook in terms of how the payor mix really helped the number?
So our ARPOP improved by 14% to 57,380 rupees. And, I think the payer mix, the change to insurance. So we have a very healthy payer mix currently. We have about 40% who are walk-ins, and we have 80% which are 40% which are insurance. And then we have about 7% international patients, and this has grown by 18%. So we continue to see growth in that. And the rest, we work with state governments and Ayushman Bharat.
All right, Ms. Reddy, good to have you on board. Thank you so much for joining in.